Good day, ladies and gentlemen. So today I want to teach you a very powerful scalping strategy that plays out on a daily basis. Never will a day go by without this strategy playing out. So Monday through to Friday, anytime the forex market is open, is an opportunity for you to make money with this particular strategy. Let's get right into it. I call it the V gap strategy. Okay, this is my personal strategy. You can't find this anywhere on the internet, okay, anywhere else on the internet. So I call it the V gap strategy. Excuse me. So I named this strategy V gap because you're going to see a V shape and then you're going to see a fair value gap. So it's a combination of a V shape and a fair value gap. Also, something else you need to take note of is that you can also have it as an inverted V. Okay, when you have it as an inverted V like this, you are looking to sell. Okay, you are looking to sell. Whereas when you have it as the normal V, letter V like this, you are looking to do what? You're looking to buy. So let's get right into the conditions. So how will you take a sell or a buy trade? Now let me give you the breakdown. Let's say you have a bearish candle. If you're looking to sell, you need to see a bearish candle like this. Let me draw that out. So let's say this is our bearish candle that I have drawn. Liquidity is going to be resting above this candle and below this candle. Okay, you're going to have your buy side and your sell side liquidity above and below this candle. This is a 5 minutes strategy. Okay, so you can see I'm already on 5 minutes time frame. What you want to see next is you want to see bullish candles taking out the liquidity at the top. Okay, you want to see bullish candle taking out the liquidity at the top, and then you need to see bearish candles taking out the liquidity at the bottom. Now this price leg that took out the liquidity at the bottom is going to leave you with an FVG, a fair value gap. You can see the inverted V right here like this. So what we're looking for is for price to come back into that fair value gap and give us a sell trade. Hope that is clear. Now, what is the criteria for buying? If you want to buy, you need to see a bullish candle like this. Let's say this is a bullish candle. Definitely liquidity will be at the top and at the bottom. You want to see price take out the liquidity at the bottom, which is what forms the first part of the V. Then price has to come and take out the liquidity at the top with bullish candles, leaving FVG behind, a fair value gap behind. Once this plays out, we wait for price to come into the fair value gap and give us a buy trade. So we're going to enter when price comes back into the fair value gap. Hope that makes sense. Okay, so if you followed up to this point and there is any part you do not understand, you can ask questions in the comment section. I'm jumping right into the examples. Okay, I've marked out some examples already. Even if you don't understand what I explained, by the time I start explaining the example, I believe you're going to understand it. Okay, so what do we have right here? Look at this particular red candle. All right, we have bullish candles that took out this the liquidity at the top. Can you see the bullish candles taking out the liquidity at the top like this? Okay, then we had bearish candles coming down to take out the liquidity at the bottom part of that red candle. So this is the bottom liquidity. You can see that these red candles took out that liquidity. Now let me zoom in and show you the fair value gap. I think I'm going to need horizontal lines for that. Copy for me. Okay, so you can see the fair value gap that was left behind. Look at it here. Fair value gap right here. Let me move this. Okay, so this is my fair value gap. Now I'll wait for price to come back into this fair value gap and give me a sell trade. As simple as that. You can see what happened. Price came back right here, tapped at the top of the fair value gap and gave us a sell trade. Okay, I think price missed it a bit. Probably I did not balance it well. Okay, price missed it a bit. Price didn't really touch it. You can see, but price pulled back as though to touch it, then gave a sell trade. So you would have missed this particular trade. All right, but you can see the concept. Look at this V shape right here. Good. So let's go on to the next example. All right, I think price later got there, right here, and gave us a very small sell. Okay, so look at this example now. You can see this. Look at this blue candle. What happened? Bearish candles took out the liquidity at the bottom part. Bullish candle took out the liquidity at the top part. So let's look for a fair value gap along that leg. Look at this. This is a fair value gap right here. The wick of this red candle did not touch the wick of the other candle, so leaving us with what? Leaving us with a gap in between. So price is expected to come back to that gap and give us buying opportunity. As you can see what happened, we had a buying opportunity that moved up. Okay, so let's look at other examples. This is a very powerful strategy. If you're getting any value, please subscribe. That's the only way you can support me right now. Okay, let me see. I have other examples already marked out for you. This happens on a daily basis. In fact, you are going to see several trades in a day, okay, with this strategy. Okay, so this is another example right here. Let me zoom out a bit. Okay, so what do we have? We have a red candle right here. Price took out the liquidity at the top with bullish candles, took out the liquidity at the bottom with bearish candles, giving us a beautiful and lovely V. Where is my horizontal line? I want to point out the fair value gap. That's why I need my horizontal line. So let's zoom in a bit. So where is my fair value gap? I have it right here. The wick of this candle does not touch the wick of this other candle right here. Hope you can see that, leaving us with a small gap. And you can see what this particular red candle did. This red candle right here, you can see what it did. It tapped into that fair value gap and did what? Gave us a lovely and beautiful sell trade. Okay, so let's see. I have another example right here. So what happened? What played out right here? Same thing. You're going to see several trades in a day with this strategy. Remember, this 5 minutes time frame. See, this is a blue candle. What happened? Red candles took out the liquidity at the bottom. We had blue candles taking out the liquidity at the top. So this price leg that completed the V is where we'll be looking for fair value gap. And I can see my fair value gap already. The wick of that candle did not intersect with the wick of this other candle right here, leaving us with what? Leaving us with a fair value gap in between, which we expect price to tap into. And you can see price did just that with this red candle, and then we had a buy trade. Okay, so this is, I can go on and on. Let's see if I marked out another example. Okay, there's one example here also marked out. Let me take away this rectangle. So let's check out what happened here. Let me move this horizontal line so it doesn't confuse you. Okay, I can see I have what's it called, a red candle right there. What happened? Bullish candles took out the liquidity at the top. Bearish candle came down excuse me, took out the liquidity at the bottom, and then we have to check that leg for fair value gaps. And I can see right here fair value gap is there. So this is my fair value gap. Okay, what happened? Look at this. This blue candle tapped back into the fair value gap and gave us what? Beautiful and lovely sell trade. Okay, so let me see if I can get one randomly. Okay, look at this blue candle. This is a blue candle. These red candles did not take out the liquidity at the bottom, so it's not valid. Okay, so I want to show you how to look for them. Okay, look at this blue candle right here. This is a blue candle right here. The red candle took out the liquidity at the bottom, but the blue candle did not take out the liquidity at the top. Invalid. Okay, all right, so let's see, do we have, okay, I can see a beautiful V right here. Look at this blue candle. Okay, so what happened? Red candles took out the liquidity at the bottom, then we had blue candles taking out the liquidity at the top, giving us this lovely V shape. You can see this V shape, very important. The V shape can even help you visualize the pattern. All right, so I'm looking for fair value gap around here. I have one here. The wick of this candle did not intersect with the wick of this candle right here, giving us a big gap in between. Okay, so I expect price to tap back into the gap, and you can see what this red candle did. The red candle tapped back into the gap to do what? To give us a beautiful buy trade. All right, if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.